Well, I think we're offering something that hasn't really been available before. It's the benefits of a traditional ETF, the low cost, the tax efficiency, the transparency, and the ease of transactions, but with proven long-term active management, with the idea of being benchmark agnostic, looking different than the indexes, the experience, the judgment, the alignment, the accountability, all of the benefits of true active management. And we're going to be offering 3 that are based on the areas where we think we have deep and proven circles of competence. So the first is the Davis Select US Equity ETF, ticker DUSA. And this focuses on our best US ideas. And so it is a concentrated portfolio of 20 to 30 stocks that will look completely different than the index. The second comes from our long history in the financial sector. It's the Davis Select Financial ETF, ticker DFNL. And this one will allow us to build a concentrated portfolio of our best ideas in this exciting sector where we have a long history. And the third is based on our global research platform. It's the Davis Select Worldwide ETF, DWLD. And here we can invest and build a concentrated portfolio that will look completely different than the indexes, that can be invest in any geography or companies of any market cap around the world. Well, we're offering ETFs because, one, we think we're in an especially good position to do so. After all, we already have a philosophy of low turnover and low costs and a culture of transparency with our clients. So we think it's a logical extension of what we already do. But more importantly, we have clients asking for them. So we have existing financial advisors, many of whom have been with us for decades, who have moved to platforms that are based on ETFs, and they want to be able to offer our proven long-term management, but in an ETF structure for their clients. They want the transparency and they want the tax efficiency. But we also think at a time when the passive indexes are so much, in a sense, almost in a mania, we feel that it's important that even traditional ETF investors reserve a place in their portfolio for proven active management. Because we know from looking over history, even the indexes go through cycles relative to active management. And there are certainly times in that cycle when proven active management can add an enormous amount of value. Well, one of the great advantages of our Davis Select US ETF is that it doesn't have to own 500 companies. It doesn't have to own the average company, because after all, it's easy to see why the average company could face headwinds in the future. We like to think of the ability to concentrate and look different than the benchmark as an enormous advantage. So for example, if you look near the top of our portfolio, we're able to have large positions in companies like Amazon and Berkshire, which might only be 1 or 1.5% of an index, but we can have 5 or 7% in this concentrated portfolio of our best ideas. And we think owning above average businesses over time will produce results that will be above average. The Davis Select Financial ETF has an enormous advantage in that the largest financial indexes are incredibly concentrated in just a few names. For example, the XLF has over 40% invested in only 5 companies, 4 of which are mega cap banks. So we think running a concentrated financial ETF, we have the advantage to have more diversification than this index ETF. So we're able to own positions in companies that might not be large enough to matter in the large financial ETFs. So a company like Markel Insurance, so not in the mega cap banking sector, not a huge company, and yet one with 20-year record or more of successful value creation. One of the most peculiar things about global ETFs is how they all own the indexes that are defined by market cap or defined by geography. We feel running our Davis Select Worldwide portfolio, we have enormous flexibility. We can look at where companies earn their money. We can own the best companies at the most attractive prices, whether they're large, whether they're small, no matter where they're listed. So a great example would be our holding in Naspers. It's a South African company, and yet its most valuable asset the greatest percentage of its value is represented by its ownership of one of the finest companies in China, Tencent. So rather than simply buy the company Tencent in China, by being open-minded, by doing our own research, we can own it at a discount by owning it through the South African holding company, Naspers.